Alright everyone, welcome back to the channel for another update on Bitcoin. In today's video, I want to talk about a few different things. I want to talk about the market structure. Has it been changed or is it unchanged? And I want to talk about an interesting fractal that I see playing out on the daily time frame. We're going to be talking about, once again, one of the most important levels we would need to see a trend reversal. And we're going to finish off talking briefly about the greater market. So I'm going to make this video relatively quick compared to my other videos because simply yesterday we made the video Bitcoin the lower high. This was a 33-minute video where we went through a plethora of charts and we talked about Bitcoin against the SPY, Bitcoin against the M2 money supply, the moving averages, macro moving averages, lower time frames, market structure, all of that good stuff. So let's dive into this video and we'll make this one pretty quick. So what I want to talk about to start with is the market structure. Has it been changed or is it unchanged? Well, let's look at the 4-hourly time frame and let's decipher what has been going on in this quote-unquote 3-day bull market that we're currently witnessing over on Bitcoin. So you can see since the 9th of June, we've basically fallen off the table from 30,000, massive capitulation down to these lower levels. Now, I want to start off by highlighting this level here on the 16th of June. And why this is important is because this was a big run back up to the upside. And this was where we solidified another lower high in the market structure. We came up to 23,000 approximately. And why this is interesting is because the bullish price target that everyone got out of bed for on the 16th of June was Bitcoin pumping back up to 23,000, and people were saying the bull market is now reinitiated. But if you look back 7 days ago, you know, we were at 30,000, and if only a week ago you said that we're going to move down to 23,000, that would have been considered FUD. So it's very interesting how last week's FUD has turned into this week's bullish price target. I'm going to remove this now. I just did find that fairly interesting, judging by you know, social metrics and market sentiment. But nonetheless, what did we do? From the 16th we broke down, and as you can see, we're just littering the chart with these lower lows and lower highs throughout all the time frames. What did we do on the 21st of June? We pumped up to 21,700. We solidified another lower low, and bear in mind, I mean, we can zoom out and do this forever going through this entire chart, but I just want to talk about these lower time frames. But what have we done today? In the past 12 hours, really specifically, we've had a fairly decent run up, and we are running up at this moment of time. We are currently sitting at 21,100, and once again, this is interesting because the previous lower high was at 21,700. So at least in the 4-hourly time frame, you really can't get too out of bed until we take out 21,700, and then even if we do, there is a lot of other very interesting levels that would be very hard for us to move up to. So question number one, has the market structure changed? No, the market structure is completely unchanged from 2 days ago, where we did make this video Bitcoin the lower high. I think this is gonna say 2 days probably by the time I upload this video, because this was probably like a day and 22 hours ago or something, but nonetheless, downtrend is absolutely still in play. I really don't like using trend lines just because I feel like you can draw them 1,000,001 different ways, and then it happens all the time where you break above them and then you just slide below them like they're absolutely nothing. I'm really interested in the market structure, mainly being lower lows and lower highs right now. So has the market structure changed? No, we are still in a lower high formation, and this really kind of does seem like a rounding top in my opinion. Now, this did look like a head and shoulders earlier, and when I made an Ethereum video about an hour or two ago, I was talking about this head and shoulders, but it does seem like we are, I don't want to say invalidating it, because you really can just draw something like this and it would still be valid. Nonetheless, it is looking like it wants to do, it looks like it wants to move a little bit further up to the upside, and I wouldn't be surprised necessarily if we do take another leg up. For example, I don't actually think we'd be able to take out the top of the 4-hourly EMA ribbons, and if we do, I imagine it would be within the next 4 to 8 hours. Subsequently, the 13 EMA would be coming down to 21,600, and subsequently, I do not think that 21,600 would be taken out. I think something like this could play out, and then once again, you could just draw out a greater head and shoulders, because This could have been drawn multiple ways before we had, you know, accurate information on what was going on. For example, you can see left shoulder, head, and then this would have been the right shoulder, but this is where we would have wanted to come down and break down, and this didn't happen. So then you could have said, okay, you know, this is just one greater left shoulder, this is obviously still the head, and then you could have said as well, you know, this is the right shoulder. But you know what happened? We came up, now we're taking another big leg to the upside. So I honestly think this head and shoulders is very, very valid, and if we get back the original head and shoulders that we see panning out, I do definitely think something like this can happen. Bear in mind, you know, if I move this over, we did have basically a mini head and shoulders, a mini fake out of a mini head and shoulders over on here. You know, you can see this almost came into fruition, and then boom, we just came back up to the upside. But the price floor is still there. Head and shoulders is not yet invalidated. It has just kind of morphed into a larger right shoulder. So at this moment in time, this head and shoulders would definitely be something I'd be keeping my eyes on. 21,350 really does seem like at least a short-term price to beat. But then again, you have the 13 EMA, and this is going to provide a super high level of resistance. And why is the 13 EMA going to provide such a high level of resistance? Because the 13 EMA is such a good indicator at letting you know what is the market structure doing. This is one of my favorite short-term indicators, because you can see we flipped below it at 46,000, you broke down, you tried to flip it, you came back for the back test, you failed, you broke down, rejected, failed breakout, failed move equals a fast move in the opposite direction. We got a fast move in the opposite direction. We lollygagged, had a little crab market into this, break up. This was a failed move. We broke back down. Once again, had another failed move, and this turned into a double fake out, a double top, an M pattern. This was a failed move once again, equals a fast move in the opposite direction. Subsequently, we massively broke back to the downside. And now for the past couple of days, we've really been seeing another type of a crab market, where we've more or less just been capitulating sideways. And even though, you know, we have been making at least higher lows since the 18th of June. So bear in mind, you know, this has been a 5-day bull market, or, you know, I say bull market as a joke. I posted over on my Twitter earlier, are you enjoying the 3 or 4 day bull market? Because as far as I can tell, this is just another dead cat bounce. Now, market structure is relatively flat, or should I say the squeeze momentum indicator is relatively flat on the 4-hourly time frame. On the daily time frame, it is starting to subside as we do have this bounce. Weekly time frame is unchanged, which really does tell me that the macro bearish structure is very much in play, and I do think we would be getting ready for that big move back down to the downside very soon. I don't know what these dotted lines are doing here. This is the head and shoulders, but I don't know if it's trying to tell me the price target is all the way down here. I don't know what it's doing, but nonetheless, this is what I see panning out. Now, there's one other thing I want to talk about, and it is a interesting fractal and one last price target that you would really need to keep in mind, because this would be another one that I do not think we'd be able to break above. Now, in the past couple of months or so, we've had a few FOMC meetings. We had one on the 4th of May over here. We pumped into the price and capitulated below it, and what was interesting about this is even when we had our bounces back up, we never managed to break back above the FOMC meeting high. Now, let's look at what happened on our last FOMC meeting. So this happened on, I believe it was the 15th of June. So we had our meeting on the 15th of June. We pumped into it as we always do on these FOMC meetings. For some reason, even though we get bearish news, we still pump into the, we still pump on the day of the meeting rather. What did we do? We pumped up, and this is kind of where we started to expect a big leg to the downside. But what did we do before initially taking that big leg to the downside? Well, we capitulated, we had a crab market for a couple of days, and we were making this market structure where in the macro time frames you were making these lower lows, lower lows, lower lows, and then on the daily, all of a sudden you had one big move back up to 22,800. Now, if we mark this by a horizontal ray and see what happened on the 4-hourly time frame, what can you see? You can see this was the lower low that we were talking about on this market structure, and as you can see, you've got let's just say from here, so you've got a high, lower high, lower high, lower high, and this is still what is playing out in the macro time frame. But what is happening on the daily right now? So as just like we were here, we were capitulating, going crab market, and in the macro time frame, you can see, you know, we were still making these lower lows and lower highs within the market structures. Specifically, the lower highs is what I want to focus on. And then out of nowhere, you saw a big pump up into the next day, and you temporarily actually pushed above the previous daily candle body. We looked at this on the 4-hourly time frame, and you can see this was where we got rejected from the 4-hourly EMA ribbons, and subsequently we started moving back down to the downside. What are we doing right now? Well, just like we were crabbing here, we are crabbing right now. We have been making this market structure where in the higher time frames on the daily we've been making these lower lows and lower highs, and at this moment in time a little bit of momentum has kicked in. Some of the degenerates are out there, you know, heavily buying a dip right now, and as you can see, we've pumped back up and we've got a daily candle wick. It may be a candle body close. We'll see how it pans out later. But nonetheless, we have had a slight move back above this candle here. Now, if we do not get any continuation coming in the markets, I definitely think this is going to be something where we have, you know, that kind of double top where we take it's almost like an expanded flat double top. You know, normally you have these expanded flat bottoms where you've got a bottom, you kind of chop sideways for a bit, and then you have an expanded flat bottom, then go to the upside. This is basically almost what we're seeing, but on the inverse. So you can see, you know, you have this big run up, you have this crab market, you take that next leg to the upside, and this almost looks like the chart of Bitcoin's all-time high. You take that one extra leg to the upside, you do not have enough momentum to keep you pushing, and we are not really getting supported by volume at this moment in time. Sure, in the lower time frames you can see a tiny bit of volume, but we now have a new price to beat, at least at this moment in time. As of the time of recording, you can see we do this time over time again. Yes, hourly time frame, we do sometimes make higher lows, higher highs, all of that good stuff, but you zoom out, you really look at the big macro moves, specifically the ones that take you back into the 4-hourly EMAs, and you have the move into the 4-hourly EMAs at 23,000, you have the move into the 4-hourly EMAs at 21,700, and now we are having a move back into the EMA ribbons at 21,000. So 21,000 is the short-term price to beat. You would still need to take the lid off of the previous high up here, which is at 21,700. And even if you did that on the daily time frame, I think it's very important to recognize that unless you take the top off of the FOMC meeting high, roundabout, you know, you can say this is 22,700 on the FOMC meeting, or you can draw this up to here at basically 23,000, which once again was this macro top up here, then I don't think the market structure would have changed whatsoever. So wrapping up this video, I also do want to show you this basically, once again, this expanded flat correction, which is once again where you have this bottom, you either crab or you take a leg up, and then you have an expanded bottom to the downside, and then you start moving up or doing whatever you're going to do. This is kind of what we're seeing, but to the inverse. You know, as you can see, big run up, you had an expanded, I don't even know what you'd call this, an expanded move back to the upside, an expanded top, maybe an expanding double top, let's call it that. You had this big move up, you took out the top, you pushed up for literally a day. You can see, you know, these wicks were only up here for a day, and there was 2 separate daily candles. You did not get continuation, you did not get volume stepping in the next day, and what subsequently happened, you started rolling back down to the downside because you were still very much in a bearish market structure, and that is really what we're seeing at this moment in time. So be super cautious. I don't think the bottom is in yet. I do think we're getting ready for that next leg to the downside. Could be wrong. I've been sitting on the sidelines for quite a long period of time now. I am also taking this time to buy the dip on Bitcoin. I have been saying since 25,000 I've been buying in $1,000 increments, and I do plan on buying all the way down to 14k, even though I don't think 14k is coming. So that means I did buy at 25, 24, 23, 22, 21, all the way down to 18,000, because we came down to 17,600. As I said, $1,000 increments. I have a buy at 17, didn't get hit, I bought at 18, and we are seeing this run up, but once again, market structure is completely unchanged. I would also like to just spend 1 minute talking about the greater markets while we do wrap up this video. Bitcoin In my opinion, the reason why we are seeing a bounce right now, besides the fact that the stock market had a baby bounce, is that we are basically back testing the previous all-time high. We all knew this would be a massive, massive level of support. Do I think it's going to hold forever? Absolutely not. I think we're coming down to 16,500. That's where I think the bottom will be in, and then I think we can start moving back to the upside. Looking at the total, we're holding the 200 week, and I think we're going to move down to the 300 week, representing a 250 billion drop. Altcoin market cap, the exact same, sitting on the 200, coming down to the 300 would be a 186 billion drop, or a 37% drop approximately. The DXY, the US dollar index, bear in mind this is the weekly time frame, this is the market structure on the dollar right now. We are on a absolute rampage to the upside. We are in a cup and handle formation. I really don't think the price target of this would be hit. I don't think we would come anywhere near to 118. My personal price target right now is for the dollar to come up to the 1.618 fib, up to 111, and then I think that's where we're going to top, and when we're going to start breaking down. While the dollar is up here, or should I say when the dollar's moving up to 111, that's when I expect the final capitulation to take place. This is when I expect the SPY to take its final leg to the downside, another 15% drop, maybe more, down to 322, and this would carry us all the way down to the 200 week moving average. So that is basically all I've got. Post market is slightly lower than the price right now on the SPY, which is never really a good thing. We're going to see how this opens tomorrow, but to answer very briefly on what we talked about at the start of the video, has the market structure changed? No, we are very much putting in this lower low, lower high formation. If you did want to be more macro bullish, then you would need to take out the top of the daily push up here, and you would also need to take off the roof of the FOMC meeting, which once again is the same price at 23,000. Until that happens, and even if that does happen, I do not think that we are in the clear. I think we are getting ready for one last flush out. I'm not a polar bear. I love Bitcoin. I'm here for the long term, but looking at this chart objectively, nothing's changed. I do think the next leg to the downside is coming very, very soon. So I've got for you today, as always, cowboy out. Peace.